The best RSI trading strategy for stocks and crypto. Okay guys, so in this video we're going to talk about my favorite overall strategy when it comes to basically trading and investing in stocks and crypto, and that's using the RSI. So the RSI is short for the Relative Strength Index, and that is simply a way we're going to basically look at how either popular or unpopular, how either overbought or oversold a typical equity is or a cryptocurrency. So guys, I hope you enjoyed this video. We're going to kind of take a look at several different stocks and cryptocurrencies and show you guys exactly how I use this strategy to find my entry and exit points. So if you guys enjoy this content, be sure to smash the subscribe button and hit the thumbs up button for more videos. And if you guys want to actually see my actual crypto and stock portfolio, my actual trades, be sure to check out my Patreon, link in the description below. Okay guys, so before I get into some examples here, I want to actually define exactly what the Relative Strength Index is. So this is on Investopedia. So you can see here it says the Relative Strength Index is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. The indicator was originally developed by J. Wills Wilder Jr., introduced in his seminal 1978 book, New Concepts in Technical Trading Systems. So traditionally, it says that if an RSI is above 70, that the security or cryptocurrency or whatever you guys are using is overbought. And if it's below 30, it means that it's oversold. So guys, this is a really, really easy indicator to use. And the reason I like to do it is because when I'm trading, okay, I like to basically use easy things to understand. And the RSI for me is the easiest one to understand. If you take a look here, you guys, I'm using TradingView. You can use TradingView. It's 100% free to use. Click the link in the description below. I'll give you guys a free link. You can sign up to TradingView. And all you have to do here is go to TradingView, and they have something here called indicators. You can simply click indicators, okay, technicals, and then you can just scroll down here where it has Relative Strength Index, and then you can click that and it'll bring it up on the chart. So what it'll do is it'll show down here. So for this example, we're taking a look at Tesla, okay? So right now Tesla is trading around $700, has a market cap of $728 billion, and it's one of the more popular stocks out there. It's one of the stocks that I've been trading and investing in off and on ever since 2020. So I wanted to kind of use this in this video example because I think it's simple to understand. I think most people are familiar with Tesla, okay guys? So if we take a look here, as I'm making this video, okay, Tesla's been going through a lot of different changes, okay? So we can see that reflected in the RSI. So basically if we go back here, all the way back here to November 2021 at the height of the markets, okay, we can see that Tesla was seriously overbought. Okay, so remember from the article that we previously read, if a security is trading over the RSI of 70, it's considered overbought. So this was a really dangerous area for Tesla. If you take a look here at the RSI, you can see it was well over 70. This is one of the reasons why I wasn't really talking much about Tesla stock back in late 2021. And this is probably one of the reasons why Elon Musk began dumping those shares, guys. Okay, according to the RSI, the security was overbought. So now if you take a look, moving forward a little bit, you can see that there were several periods where we could trade in and out of Tesla stock. Now obviously I believe in holding Tesla long term, but there is some opportunity because Tesla is a very volatile stock. Okay, it can go up or down 10% in one day. It's not like a slow dividend stock like a Walmart or a Procter & Gamble or something like that. Tesla, when it moves, it really moves, but when it dumps, it really dumps. So we can take a look here. We see on December 20th, here's an example where it looks like the stock bottomed. Okay, the RSI was almost at 30, and it was telling us that this was a good position to buy. So we could have bought Tesla at this dip here. And then as the RSI was going back up near 70, we could have sold here and made a nice profit, right? So we could have bought in at 900, sold at 1100. So you can also use this strategy when trading options, okay? When I'm trading options contracts as well, I'm also looking at the RSI to pick up momentum. So taking a look here, this is one of the reasons why I recommended that I'm getting back into Tesla, because the RSI was trading near low levels, okay? The RSI was at around 30. Now still, it's more than an attractive level. If we were to take this RSI graph and kind of split it into two halves, right? So from 30 to 50 would be one half. From 50 to 70 I generally want to be buying when the RSI is between 30 to 50, and I want to be selling when it's 50 to 70. And this is simply because markets are based on emotions, okay? People get overly excited on stocks, or they can become overly fearful on stocks. So if you guys are using the RSI on this example of Tesla, this was a really kind of easy stock to trade. If you're paying attention to the RSI and paying attention to the signals, using these valleys here, okay, these valleys as nice buying opportunities. We have a nice valley here, a nice valley there, okay, we have a nice valley right here again, and then we also have a nice valley here in the latest, in like May, early May, and things like that. So if you're going to be like scalping or investing long term, you definitely want to be buying dips, selling rips. So even if you're accumulating a long-term position, okay, a lot of you guys out here, you probably want to add Tesla to something like your retirement account or something like that. If you want to be adding to shares, you're going to be better off buying Tesla and stocks like that when the RSI is basically at a much lower level. You know, this is just one of the easiest ways to kind of make sure you're not overpaying for your shares. Okay, so now if we take a look at more of the year-to-date chart, we can see that you could have easily traded this chart as well. So if we were to draw a line here, we could see that obviously ever since Elon Musk, okay, so Elon Musk tried to buy Twitter, is actively trying to buy Twitter, we can see that the stock has been trending down quite greatly here. If we make a nice trend line here, we could even draw a bit of a channel, okay, a lot of downward pressure heading into the stock. This was very evident. And one of the reasons why I think a lot of people were going against Tesla and things like that. So if we draw this channel, this downward movement here, we can see that this coincides exactly with the RSI as well. But there was a bottoming, okay? There was a bottom of the RSI on May 24th. That's when Tesla shares traded at around $624. That's when you could have, that's the opportunity where you could have bought here this first green day, okay? So when we're using the RSI, we're looking for a reversal. Usually we're going to see a big green candle, meaning that the buyers are coming back into the stock. And then you could have simply bought here and held long, or you could have sold here and made a nice almost about 20% profit in just over around a week or so. So this is one of the examples I use on a stock like Tesla. Very easy to understand, guys. We're buying the RSI when it's basically trending towards, buying the stock, underlying stock when it's trending towards 30, and we're selling when it heads up to around 50 or higher, preferably around 70, but you don't have to necessarily wait that long to take your profits. You can get in and out of this stock very quickly, generate profits. You can take that money and reinvest it later for more shares, or you can just go long on the position and just sit on your hands and just wait. Okay, so now I want to also do this with another pretty active, pretty volatile stock that a lot of people are obviously interested in. A lot of people like to trade. So we're going to take a look at another stock that this RSI strategy really useful with, and could have given you a lot of insight and when to trade it. So that stock is Meta, okay? So Meta is actually changing their ticker symbol, but I just want to take a look at it and show you guys how the RSI kind of dictated what took place on Meta platforms. So as we can see here, Meta platforms was like a fairly consistent stock for a long time, and then something took place, okay? So obviously we could see that the RSI changed here. So a lot of people would say, well, wait a minute, the RSI was at 30, was this a good time to buy? Well, not necessarily, okay? Because the problem with a stock like Meta platforms is that as we can see here, we take a look at the RSI, it was trading at around 30 for a long period of time, but there was no clear bullish reversal. So this is why I want to kind of show you guys an example of where you don't just necessarily buy when the RSI is low. You can see here, we don't see any bullish activity. We don't see any really bullish run up. The stock is trading flat. So usually when the RSI is around flat and the stock is trading flat as well, that means that the stock is probably going to trend lower, okay? So obviously when we saw Tesla, we saw big bullish run-ups. That was a good time to get into the stock, and then you wanted to sell in the RSI. But in a stock like Meta, it completely tanked after that earnings report. You know, they had a really bad earnings report for Q1. The Q4 2021 earnings report was a disaster. The stock tanked, and as you can see here, it tanked well below the RSI. So a lot of people thought that this was a good opportunity to buy. But once again, we're still not seeing a big change in the trend. We're still seeing the stock basically just flatline. So this is an example where the RSI can be a bit misleading, okay? You don't necessarily want to just see it as like, okay, if it's low, I buy. You want to take a look at the movement. And when a stock is trading flat like this, it's not very easy to us to make profits unless we're just simply scalping shares. So we're basically like taking a look here, like, okay, we saw a dip here in the RSI and then we want to sell here. But these stocks are a little bit more difficult to trade when we're basically seeing a lot of flat action here. So I just wanted to give you guys a heads up on an example where the RSI was low, but it wasn't necessarily a buy signal because we didn't see a big bullish movement and we didn't see a big change in the volume. So now let's look at another example, a pretty good example, I think, of a stock that, once you guys, again, is very popular, it traded a lot, and that you can really profit from when it comes to the RSI. So now let's take a look at another popular stock as well. So let's take a look at a stock like Amazon. Okay. So now here we are with Amazon. So once again, this is a company, obviously very popularly traded, has a lot of movement in the RSI. This one is a little bit easier to trade simply because the stock is not flatlining, okay? So as we can see here, if we take a look here over the 1-year chart, we can see that on these dips, these were wonderful buying opportunities. So as you can see here, the RSI dipped below 30. Could have bought that dip there at 3,000, sold it into strength. We had another dip here at 30, and sold right here, bought at the support level of 3,100, sold up here 3,700. Okay, nice profit. Once again, we saw another dip all the way down, January 21, and then a reversal from 2,800 to 3,200. And then lastly, more recently, we've seen the stock completely oversold. Okay, this is when a lot of insiders came in and bought up stock. So we can see right here at May 10th, there was a double bottom. So the Amazon was around $2,000, and now it's up almost 25%. So this is a little bit easier. Okay, so this is a better example. Once again, the stock is not flatlining. When the RSI is bouncing, the stock is really moving up. So this is another good stock to trade. So Tesla was a very aggressively traded stock that moves aggressively. Facebook, not so much. A little bit harder to trade that one, probably because the market cap's a lot bigger. And just the way the company is going right now, Facebook isn't very volatile. Amazon is a lot more opportunity. Okay, it's trading a little bit more like Tesla. Lots of opportunities in here. So let's talk about cryptocurrency. Okay, so let's take a look at the most popular cryptocurrency, of course, which is Bitcoin. And you can use a lot of these similar concepts when trading Bitcoin. So if you take a look here at the 1-year chart at Bitcoin, we can see that when the RSI was low, these were good opportunities to buy back in July 2021 when Bitcoin's around 30,000. If you bought this dip here around 34 RSI, you could have definitely sold some much higher at around 47. If you really waited for it to be oversold when the RSI went way past 76 to almost 80, okay, went to about 77, you could have sold here at the peak. So taking advantage and looking at the RSI when it was completely overbought would have been a good idea to get out of the market. And then there's a few other instances where Bitcoin is broken down way below RSI of 30, which would have been good instances to get in. So obviously we have a nice dip here at around 34K. You could have bought that dip, sold here at the top at 47, made a nice profit. And then you could have bought this most recent dip here. Most likely, according to history, when Bitcoin is oversold past 30, okay, we usually see a nice bullish reversal. And I do expect crypto to bounce back later this year. This is a bear market right now, but you know, Bitcoin and other cryptocurrencies are so oversold. There's really not a lot of people that are willing to sell these cryptos any lower, in my opinion. So now we see Bitcoin's RSI kind of recovering back to the mean of 50. This tells me, it doesn't really show me anything because as we can see here, it's flatlining and we could dip lower. But if I see the RSI kind of climbing back up and I don't see a big bullish flag, a big bullish movement, I'm usually going to stay away, because you can't just look at it 100%. As we showed with Facebook, there were times where the RSI was moving up, yet the stock, Facebook stock or Meta platform stock was trading flat, which is usually a bearish signal, in my opinion. Okay, obviously you guys do your own research and form your own opinions, but if I see the RSI moving up and I don't see the corresponding security or cryptocurrency moving up as well, I'm going to assume that that's a bad sign. We're probably going to be heading lower. So if you take a look back even further with Bitcoin, if you take a look here, the RSI is also very useful for kind of finding some really good buying opportunities. So over the last 5 years, we have the RSI at 30 in December 18. That's when Bitcoin was just at 3,500. Then we have the RSI, of course, at the beginning of the pandemic. That was when Bitcoin was at 4,500, and now most recently we have the RSI near 30 again. So what this tells me is that over the short run, Bitcoin could trade down, it could trade up, but over the long run, this is going to be one of the better buying opportunities, because this is only the third time over the last 5 years that Bitcoin's RSI has traded near 30. So this means that this is a strong buying opportunity. Every single time the RSI is traded at these levels, the Bitcoin has ended up much higher in the next year. As we can see here, it went from 35 to 12,000, then it went from 45, of course, to its high of 59,000. So now will history repeat itself? Most likely. So this is a good buying opportunity. So like I said, guys, this strategy is very simple to understand. All you need to do, you can find the RSI on using TradingView, which I'm finding it. You can also find it on your favorite trading platform. They have it on Webull. They have it if you go online to Yahoo Finance, at your brokerage, maybe Fidelity or something like that. I don't believe they have the RSI indicator on, I think they have it on Robinhood, but you have to use the desktop version. You can't use the app. The RSI on the desktop version of Robinhood, so you guys can find it there. So yeah, just take a look at this indicator. It's my favorite indicator. It's very simple to understand. We're basically, like I said, to wrap things up, guys, we're basically looking to buy with the RSI below 50, and then we're looking, if we see the RSI rising, we want to see a big rise in volume and a big spike in the price. If we don't see a spike in the price, we know that this could be a fake out, and this probably isn't the best time to get in. But the good news is that this is just one of the many indicators you can use. Obviously, you can take a look at, of course, volume. You can take a look, if you guys are trading stocks and things like that, you can take a look at insider buying. You can take a look at how many days in a row the securities finished in the green, so you can count the days. Little simple strategies like that will basically help you guys buy these stocks and cryptocurrencies when they're cheap, and then help you kind of sell them at opportune levels where they're kind of overbought and people are getting a little bit too excited. And we're going to talk about that some more, but I just wanted to kind of put out this basic video out here. I use the RSI all the time, and I never really got a chance to explain to you guys in depth, so this is my best attempt at it. Hope you guys enjoyed this video. If you guys enjoy more tutorial videos like this, please smash the red subscribe button, subscribe to my channel. I'm going to be showing you guys more strategies I use, and also I'm going to be talking about some of the mistakes that I made and how to avoid them. So like I said, guys, wrap things up. Check out the RSI, really interesting indicator if you guys aren't using it. Let me know what you think in the comments, and until next time, guys, take care.